Hello traders, what is going on? It is JB from FFT Trading, about to give you another masterclass in conquering the financial markets. And today we're going to give you 5 powerful setups that you can start implementing into your trading today. They're very powerful. They've brought me a lot of success over the years. And if you start testing these out for yourself and finding that they work for you, then congratulations, you've got some new setups that you can make some more money with. So, bit of a disclaimer. It's going to be a combination of higher time frames paired with lower time frames. However, there are going to be some setups where you can just do it on the lower time frames if you wanted to, or use it on the higher time frames only, or see if you compare them together. I'll tell you which ones you can do that with, but I just have to state at the beginning of the video that when you go lower, right, in terms of time frames, as you start to go down the list, you go to the 15 minute, the 5 minute, and God forbid you go to the 1 minute on some of these time frames. You can definitely use it, but you just gotta take one thing into consideration, right? Is that when you're on the lower time frames, you do get the opportunity to have really early moves, and you will be able to get some moves where it just flies off for you, and it keeps on flying, and you're just like making a lot of money. But the reliability of these setups, in terms of the accuracy of them working out for you, is going to be reduced. So if you're going to the lower time frames, you might be taking more losses, so it might be wiser for you to take your profits out a bit later, extending your TPs or maybe stacking some positions, but you just have to be aware of that fact. So this is not a Bible, it's not a gospel, you just have to make sure that it works for you, okay? And that's the premise for every single setup or every information you get from traders, okay? So the first one that we're going to look at, right, is what I like to call a key level reaction, okay? That's going to be number 1 on our list. And what I'll do is I'll just briefly break it down for you before we actually go ahead and look at it. So you can use this on pretty much any time frame that you deem to be a higher time frame, okay? The typical premise is that we have higher time frames for our bias, our direction, and then we're going to look at the lower time frames for our entries. However, you can just trade off the key levels themselves. If you want to wait for a reaction first, that's totally cool. If you don't want to, then that's also okay. But you just got to bear in mind that this particular setup, we wait for a price to get to a key level. Okay, so let's just go back in time now. Okay, I'm going to use the 4-hour time frame, and what we're going to basically be looking at is, well, I would look at this like this, right? So I can see that we've got this clear uptrend. I can see that we've broken structure. So right now, I can see that it's probably more likely that price is going to be traveling downwards, because you can see the trend has shifted. So the key levels for me that are important are going to be this retest level right by there. And then I've also got this level right by here. Okay. And I've also got this level right by here. So I'm going to patiently wait for price to get to these levels, right? Okay, so this would be a good example. Can you see, oh, hang on a minute, let me just draw that in properly. Always go to the wicks. All right then. So, oops-a-daisy. Can you see how it's hit that level? Okay, but look at the size of the wick. Okay, it's absolutely tiny. Okay, what we're looking for, to be fair, it might be better to use the 1-hour time frame for this. I'll just explain it quickly. But what we're looking for is some kind of reaction. Okay, so something like this. You see where prices come into the level, it's given us some indication that it wants to go down, and now we can basically go down. Okay, that's what we're looking for. We don't have to have, like, for example, if we're going to be taking trades at a downside, we don't have to have a bearish candle. But what we do need at minimum is a wick rejection, and you can see that wick is nicely rejected there, and that's the bare minimum. If we get a candle that is in favor with the direction that we want to take a trade in, i.e., if we're going to be long, right? If we're going to be bullish, we want to see a bullish candle. If we're going to be going short, we want to see a bearish candle. If we get a wick rejection and the same color candle of that direction, it's a lot higher probability. Okay, so I always will go to the next key level. Okay, so this is where your own discretion can come into play. What I'm going to pretty much do is look at the 15 minute. Okay, I'm going to look at also the 5 minute. Right, this is how I would particularly do it, and I would say to myself, well, do you know what, I can see that we're going down, we're looking bearish, so I'm going to play it like this. Okay, I'm going to wait for price to come in and break below by here. Just going to give me a little bit of added confirmation. So what we can either do is wait for a retest by here. Okay, this is just the entry, by the way. This is actually the least important part. The entry is going to be how you guys want to get into the market. Okay, but you could do this a multitude of ways. You could do it like this, where you may want to, you may expect price to have broken lower by here. Give me a second. You may have expected price to be broken lower by here, and you want to go ahead and put your entry by there. Maybe put your stop loss up by here, right? Again, this is all down to your own discretion. Some people may want to put their stop loss here, stop loss there, stop loss by there. Me personally, if I'm going to be trading this, I like to be able to get a decent risk to reward out of this. So if I was going to take an entry by here, it would be something like this, and I would probably say to myself, well, how much could I make from this move? Because I'm going to the next 4-hour key level, right? How much can I make from this move? Well, that looks like a nice 2.5 hour. If I go up by here, okay, 1 hour for me, this is probably the most normal place I'd say to put my stop loss, okay, because it's not like crazy like this. You want to have, when you have a stop loss like this, your best bet is to have an entry that comes around by here. Okay, why do you want to have an entry by there and your stop loss is all the way up there? Sure, it's safer, but it just doesn't make much sense. So let's say you go ahead and do this. Let's just say your stop loss is by there. Let's just say we go for a nice 1-to-1. Maybe on the 1 minute, what you want to do is that because you expect this move to just go down by here, maybe you want to see if you can capitalize a bit more. Maybe you want to take some trades on the 1 minute, okay? Maybe you see something like this, right? You follow that exact same process, okay? Maybe you want to take a trade like that, and maybe you just add one more position, okay, right? And let's say we put our stop loss above this 1 hour, with this 1 minute key level, right? We're able to now get, you know, a nice little 1.29 plus 1, so that's like pretty much 1.3. If this trade gets triggered, right, I can set the previous trade break even, and it's going to just do whatever, okay? Because usually when you have a small push, right, you probably want to just close out by there. Come on, it's not that much of an issue, really. Or does price want to, if it just bounces up by now, it's going to be quite sad, isn't it? We always hate seeing that, but there we go. It probably hits TP by there. Cool. Do you see what I'm saying? So that's just pretty much how you guys can go about it. You want to get your, ideally, you want to have a key level in mind, which we had a key level by there, but this can be any key level of your choosing. You want to have a reaction, which we had by here, okay? Which by minimum is just a wick rejection, or you get the desired color candle that you want, and you ideally want to target the next key level, okay? However, if you're trending, you could also say to yourself, well, because I know I'm trending, I'm going to go ahead and I'm going to go and hold this trade, and I'm going to see if it wants to push lower. But if you're going to do that, you just need to be careful, because you can see the price is failing to push down by here, right? It's failing to break. So you need to bear that in mind. You can't just hold on to your idea because you want it to happen. The evidence is showing you that it doesn't want to go down, okay? So that's pretty much it. Let's go ahead and look at the 1 hour time frame, and maybe we'll skip to, shall we skip to gold? Shall we go to AUD USD? Okay, I used to trade this pair a lot. Okay, and let's look at the 1 hour and just follow that same pattern. And by the way, again, remember what I said? This is completely how you guys want to do it, right? So if you see things, if you draw your key levels, however you draw your key level, this is pretty much the rule. Find a key level, wait for a reaction. But you could have a reaction like this, okay? In your books, right, you could say a reaction is something like this, right? Where you wait for price to simply get to the level, okay? However you guys want to draw your level, that's up to you. I always go from the body of the candle, right? If this is swing low or swing high, I go to the body and I go to the top wick. If I was to do this key level by there, I would go like this. See how I'm going to the wick, and you see how I'm going to the body around like that. Okay, you kind of, if you want to be like this, you can do that. I tend to kind of just, I don't know, it's just a reaction, an instinct to how I draw it now, and that's it. So we go from the wick and to the body. Okay, so you can, if you want to, wait for price to just get to that level, and maybe you want to find some kind of reaction on the 5 minute time frame. Okay, maybe that's good enough for you. But for me personally, I'm seeing that price is traveling upwards, and I've seen from experience that if price is trending, even if it hits a key level, it's always best to wait for some kind of signal on a lower time frame, right? So you wait for some kind of a signal. Maybe you want to wait for like this structure to break, because this is a TDP, right? This is a very important key level. This is where the trend gets respected by here. If it gets broken, it's changed, right? So you can see that you had that reaction by there, but you didn't get anything from it, right? You didn't get, there was no real trade to have been taken, in my opinion at least. And if you wanted to take your trade by here, right, you want to wait for some wick rejections just on the 5 minute. Okay, it's kind of weak evidence, in my opinion. You need strong evidence. If you want to take any trade, literally any trade, you need strong evidence. And just see how this stacks up, okay? Your thesis, right, your idea is that price will get to this key level, okay? And it will fall. That's your general idea, isn't it? So you go to the 5 minute or the 15 minute and you say, okay, I got some 5 minute wick rejections. Boom, let's take a trade. That sucks. Like, that's really not strong evidence. Now, consider this, okay? We have a key level by there, okay? I can see that the 1 hour is slightly rejecting it, okay? I can see that the 5 minute is rejecting. If I start to see price forming bearish structure, or at least breaking this level, I've got multiple pieces of evidence to tell me that the price wants to go down. So you see how different that is. You can have maybe 1 or 2 bits of evidence, but you really want it to be matched up on the lower time frames, because ultimately the lower time frames are what moves, isn't it? The higher time frames is kind of what keeps the structure all together, but it's the lower time frames that'll keep pushing. If price wants to now break above out of here, doesn't matter what structure you have on the higher time frame, the lower time frame is always going to reflect what price is doing, isn't it? So you save yourself from some kind of situation. So we can see that price has broken out by here. All right then. Okay, so let's use this as an example. Okay, we can see the price has broken out, right? Now we're waiting for a key level reaction by there. The places I would take a trade from would be around this level or this level. Okay, I can see the prices come in and it's closed quite strong bearish into that level, but no matter, we're going to use a few examples. We can see that the 5 minute is still being respected. Okay, we can see that the trend is still up, so we still have good possibility that price is going to rise, even though we didn't really get a reaction from the 1 hour. What are we looking at? Okay, we can see the price is broken up by here. Now we're getting strong evidence for a trade like this to get taken. Even if this trade loses, it doesn't matter. In my opinion, it's a great trade. Wait for price to come in. Does it want to trigger? Let's see what happens. There we go. We get stopped out a little bit, but again, this is all down to your own learnings and stuff. Or you can also maybe piece together from here is that you're looking at the 15 minute, right? You can see that we had a key level by there. How does price want to react? Does it want to go down? Does it want to go up? It's being a bit dodgy, isn't it? It's not really giving us. I mean, come on, that's it. That's just unlucky, man. That's just gross. You don't want to be trading that kind of structure. Holy, yeah, that's horrific. Okay, let's go ahead and look at another example. Okay, just one more. But I mean, that's pretty much the idea. I just want to show you one more example, just to kind of make sure that you guys are feeling comfortable, because we've got quite a few to get through today. Okay. Do we get a reaction? No, we don't really get a reaction. Remember, the best way to trade this is a higher time frame reaction to the key level and then the lower time frame entry. Okay, does price just push up by there? All right, we're starting to get a bit of a rejection from here. So what we could potentially do is, I'm not too keen on this. The evidence is not too strong, but we'll just say whatever. Price looks like it's consolidating. Let's look at the 15 minute. Okay, because it's consolidating, I'm not really too bothered about the trends. But what I can do, really, if I really want a bit more confirmation, then maybe I want this level to get broken, or even better, I want this level to get broken. But the question you got to put to yourself is, what am I valuing here? Do I want to go for the risk to reward? Okay, or do I want to go for the confirmation? Because one of them has to give. In this particular situation, one has to give, in my opinion. To have absolute best confirmation, you want to, if you see prices trending, right, even though we're in a consolidation, it's still trending by here, right? We know that obviously this isn't a whole trend, but it fits in with our thesis. We want price to rise. We can see it's trending. Price could, if it wants to, just completely start going down, okay? So what did I say, right? This was the best place for confirmation, okay? But this is the best place for risk to reward. Okay, because we can see the price is broken above by here. So if you want to sacrifice you want to say to yourself, well, do you know what? I don't really mind being wrong. Okay, if it means I can get really good risk to reward, maybe I want to go and get a nice 1 to 3. Okay, we can look at a situation like this, and prices not being nice at all, just kind of unlucky. In a situation like this, maybe you can see the price is already pushed, maybe like halfway into your TP, right? Maybe you want to close out your trade, okay? But can you see, so close out your trade, or maybe you want to go break even, sorry, okay? So can you see how it's kind of working together? That's kind of unlucky, because usually price will travel to the next key level, okay? Or if you really wanted to, maybe you could have set your key level by here, right? Maybe that could have been your key level, because true, in consolidations, we do have situations where even though this is like the consolidation, we do have these key levels which can pretty much mess us up, okay? That was another example I guess we could use, right? Let's say you can see how we have a key level by there, right? And guys, this isn't for me to show strategies. I'm just literally trying to show the setup so you guys can go and test this yourself, okay? So we had a reaction. Maybe you want to go to the 1 minute time frame now, simply straight after that reaction, look for some kind of a trend. Can I get something? Okay, maybe I want to just go ahead, take a little breakout trade, instant execution like so, stop loss, put it by there. What can I get? Can I get a nice 1 to 2? Yeah, I know. Obviously, we know this trade. Let's just say we get before the key level. It does its thing. Bish bash bosh, and we know it's going to hit TP because we just saw it do its thing, right? Maybe you want to do that. Maybe you want to use the 1 minute, but that is pretty much it for the key level reaction. Okay. The next setup that we're going to talk about, okay, is exhaustions, right? Because as we know, that price, when it trades, when it travels, it goes up and down and never goes up like this. Okay, always going to come down at some point. But the question is, if we're trending, where is it going to stop? Okay, is it going to, right? Is price going to come by here? Is it going to stop by here? Okay, oopsie daisy. Or is it going to stop halfway before making a higher high? Or is it going to do something like this? Okay, we just don't know. Okay, but when we're doing exhaustions, the first thing we have to think of is that price will not always hit retest. It will not always hit TDP. It will sometimes form this higher low by here. Okay, that's the first thing we've got to bear in mind. So when we're taking exhaustions, we have to be taking our trades up by there. Okay, it's really not wise to be taking it around by here or around by there. Okay, you really want to take it as high as possible. So the criteria for this, okay, is very, very simple, right? If we are looking at this from a higher time frame perspective, okay, the only thing that you need, okay, is a clear trend, right? A clear trend, and then you need an opposing candle. So what I mean by this is, if we are in an uptrend, okay, you can use this as an example, okay? If we're in a downtrend, the only thing that we need, okay, is one of two things, okay? A candle, right, an opposing candle. Because why is it called an opposing candle? Because the trend is to the downside, right? And what opposes that trend is bullish, okay? So you're just waiting for that. Or you can wait for multiple wick rejections. There is a caveat to this though, okay? If you see wick rejections like this, okay, if you're in a downtrend and you see wick rejections like this and they are from bearish candles, ignore it, okay? Or we'll talk about maybe why you could take that, but you know, we'll look at that in a moment. What you really want to see, which is like the proper signal, is when you see an opposing colored wick rejection. So if you had wick rejections by here and it was red, and then you see green, it's go time. It really truly is go time, okay? But if you see a candle like this, then that's also fine. So what do we say? Okay, so the criteria is we need to have a clear trend, right? Okay, so what we're talking about here, let's just put it there, is exhaustion. So what we need is a clear trend, right? Price is pushed. Okay, price is pushed. And now we just need minimum 2 wick rejections, needing, do we really need, okay, I say it's more accurate if opposing colored wick rejection shows. And that was what you know what I just meant by that, right? If we're in a downtrend and we see a wick rejection from a bullish candle, that's what an opposing colored candle is, okay? Or colored wick rejection, right? D, or an opposing candle full stop. All right, so you might ask, well, can I just have one bullish candle which has one wick rejection? Yes, you can. It's simply just any candle. If we're in an uptrend and you see a bearish candle, it's go time. If you see an uptrend and you see bullish wick rejections, it's go time, but you got to just be careful. If you see a uptrend with some bullish wick rejections and then you see a bearish candle or a bearish wick rejection, it's flipping go time, okay? So that's what you're going to be thinking of. So once you do this, okay, there's a few ways you can enter. You could genuinely, if you really want to, if you truly wanted to and not bother with the higher time frames, you can literally do this. You can enter with like maybe a stop order by there. You can put your stop loss by here, okay? And then you can go ahead and take the trade. And obviously I know this trade loses. It doesn't matter, okay? If you really want to just be kind of ballsy with it, right? However, what I personally would recommend doing is you see this, okay? You can see you got your criteria, right? Now you go to your 15-minute or 15-minute or your 5-minute. 15-minute is a lot more accurate, okay? But 5-minute, you can get in on those early moves, okay? If you have that confirmation, but you go to the 5-minute time frame and you don't see any bullish structure, right? Okay, this, in my opinion, is just the beginning because we got a high low, okay? You ideally want to see, that's a good signal, but you also want to see a break of structure above. That would be really strong, okay? And clearly, we don't have that, right? We ain't got that. So let's just keep on going until we see that happen. So what did I say by here? Any opposing candle, which we have right by there, okay? We don't see any bullish structure because what we're seeing by here right now is this. This is bearish structure. It's going up and down like this. For bullish structure, we just want to see, okay, the TDP getting broken, okay, or at minimum, we want to see something like this, okay, where we see a higher low form. Now, that's not go time right now. It would be go time if it breaks above there. Okay, that's just the start of it, okay? So we're looking for that, okay? And as you can see, no break above, so no trade, okay? So price in these situations is just kind of continuing down. We'll speak about another setup, which is pretty much just trend continuations, which you'll probably gather from what we've just been looking at, okay? But you're looking for the exhaustion, right? And by the way, you can use all of these setups individually, or you can pair it with your own strategy. It doesn't really matter at all, okay? Okay, bearish candle still. There we go. Now we can see some great conditions for an exhaustion. Why? Because price has been traveling downwards for a period of time. We've got this nice bullish candle, and now we've pretty much got everything we need to go and take some trades. So the thing that we need to bear in mind now is that the three things that could happen is that price wants to travel to this 1 hour key level, or travel to this 1 hour key level, okay, or maybe retrace 50%, okay, or maybe like form a higher low somewhere. So basically what we're doing is right now is that we're saying at best, okay, we want to ride this all the way up here, okay, but we have to basically see where price wants to stop us in our tracks, okay? But at this, the basis point is that we've got everything we need to take an exhaustion, because all we needed was two wick rejections or an opposing colored candle. So there we have it. Let's go ahead and take some trades. Okay, what can we see? All right, I can see that price has failed to break. We've had some news and price is now pushing. Let's look at the 15-minute. Okay, remember guys, we're looking at, oh, hang on. That's not looking too bad. The only thing is I'm worried about, okay, is this 15-minute level by there. But that's okay. We'll just trade until we have a reason not to be scared. All right. Do we get a lovely little retest of that level? I don't know if we do. Okay. So we had a retest by there, but we didn't get any entry because with retest, we want price to come in and then jump off. Price came in and didn't give us no entry because for me, I put a stop order right like this, wait for price to get in, set a stop order. If I don't get that, then it doesn't trigger me in. Cool. So on the 5-minute, this is the previous structure. If I want to take a trade by here, I need to see some, okay, that was a bit crazy. what I was meant to say is I want to see some kind of reaction by here. That was not very strong, but I'll just take this trade by there. Let's go ahead and see. Hang on a minute, did price remember that 15-minute level? It gave us some issues. So let's see if it still wants to give us some issues. Maybe this isn't the best trade. Maybe we can just hold off for a minute. Maybe we could manage this trade very aggressively, but it does indeed want to go and do its thing. See, this is the problem I had with AU, man. It just always pushed for a little bit and then it always just like reversed against me. This is why it was a bit frustrating for me to trade. You know, it just is what it is. So what do we have? Okay, this kind of segues very perfectly into the next setup that I wanted to talk about. Okay, so I feel like you've probably got the idea on that. I spoke quite a bit. You just need to see multiple wick rejections. Maybe we'll look at another example. Let's just quickly go by here. Okay, let's just quickly have a look by here. So this is a perfect example of what I was talking about. Okay, you see you got multiple wick rejections by there. The next point that we want to go to is probably around by here. Looking at the 5-minute, we can see that it's already bullish. We could have started right by there. Okay, looking for trades. What we're going to do is wait for price to clear by there. It really doesn't want to. And then we go. We get the trade like so. Bish bash bosh, but I don't think it bloody well goes anywhere, to be honest with you. We're able to get something. Was I able to get 1.6? I don't think I was. Yeah, this was my problem with AU, man. It's just the entries for me were a bit weird. You can see that price will make a push. Granted, it is getting quite late, but you understand the picture. You got the criteria from the 1 hour, okay? And now we are going to pretty much look to find the signal to take a trade on the lower time frames, right? We want to see that structure being resembled, respected, whatever. And then we go ahead and take that trade. Okay, cool. Let me go ahead and back to that example I was talking about down by here. Watching price go all the way down. Okay. So, what we're going to look at next, okay, is trend continuation, right? Trend continuation is like so, okay? This is where you can use multiple different time frames for this, okay? And it's so simple. All you really need, okay, obviously, is a trend. Duh. You just need a trend, okay? And then you just need to have your structure points marked, okay? So when we come to structure points, we are simply going to be focusing on, okay, high, low, lower high structure, TDP, and then retest levels. Okay, so what are those levels? Okay, like so, considering we got an uptrend. Okay, so when we're marking out situations like this, we've always got to mark out our high highs and our high lows, like so. And obviously just assume the inverse for a downtrend, okay? No matter what stage of the trend you're in, okay, you could be at this point by here, okay? Like so. You're marking this level, you're marking that level, okay? You're marking this level, and you're marking by there, okay? This is before price has made a higher high, okay? And you're marking these levels because these are all places you could take a trade from. By here, you have your retest level. By here, you have your TDP. If you haven't watched that, go and watch the video that's pinned. If you don't know what that is, go and watch the video that's pinned to my channel and you'll figure that out. And then we've got the potential, okay, potential higher low. The reason I say potential higher low is because it's not really confirmed a higher low until price makes a new higher high. Okay, once it does that, okay, it becomes a previous higher low in which it is now a TDP. This level gets deleted, this level gets deleted, okay? Now all you're focused on is the retest level, and we repeat the process, okay? So the places that you're going to take your trades from are either going to be the retest level, in which price will come down by here and ping off, or it'll come down here and ping off, or it will form a higher low by here, or it could also go extend beyond the retest level, and then you're simply waiting for some kind of confirmation, and then price will do something by here, and then it'll ping off. Boom. Okay, so this is the exact same for a downtrend. Let's just quickly illustrate it. Okay, if you're in a downtrend, okay, when you see this, you are either going to be taking a trade by there, well, waiting for price to either get to by here, waiting to get to by there, or waiting to form a lower high by around here or around by there. When I say around by here, I don't mean like 50%, I just mean in any space in between by here. And when I say by here, I mean any space by here. So we've got high-low, potential high-low formation, retest level, trend defining point, TDP, okay? So for a high-low formation, okay, you follow the exact same criteria for the exhaustion, but you kind of flip it a little bit, okay? Because you can see the price is exhausted. What kind of color candle do you want to see now? Because we're expecting price to go down. Clearly it's bearish, okay? So you got the exact same criteria, okay? Which is for the high-low, which is 2 wick rejections. It's even better if you have a bearish, like a desired colored candle. You see how when we're in exhaustion, we called it opposing colored candle. Now that when we're talking about continuation, it's a desired colored candle, right? See how that makes sense? Okay, so you're just waiting for 1 desired candle or 2 wick rejections. If the wick rejection has a desired candle with it, then it's even more high probability, okay? Follow the exact same process, okay? Mark out that key level, then look for the shift on the 5-minute or the 15-minute, okay? And in this situation, it's best to put your stop loss really, okay, behind by here. But if you guys want to make it work and maybe set it a little bit lower, if you want to do something like this, then you absolutely can do it. And the reason I say, you know, if you wanted to as well, maybe you could have taken your trade by there because the structure is still shifted, right? You can see that. If you wanted to do something like this, like that, that's a much better entry. Probably the best entry would be to take a double top around by here, okay? So that was a nice little trade. Let's see if I don't think we can get 1 to 3 from this, but maybe we can. Yeah, I just, this again was the problem with AU that I had. It just, there was always too many reversals, and you can see like I wasn't able to get too much out of it. But again, it's still true, okay? Now, the best part about this is that you can use everything I told you for the lower time frames. It doesn't have to be in the higher time frames, okay? But the higher time frames, that structure I showed you with the retest and the TDP, etc. Go back and pause if you want to. That works for all structure, okay? Let's go ahead and look at Euro USD, right? Just to you know, get a little bit fresh. Let's look at the 15-minute, okay? I know this is pretty disgusting, right? Look at that consolidation, it's gross. Wait for this to break out. I just want to see some clear price action, dude. Right. Again, there's no clear trend. Beautiful music. Yeah, it's just consolidating. It's just gross. Here's the really frustrating thing about trading, isn't it? You got to always wait, right? Always got to be waiting. Because look, we ain't got nothing really. Yeah, we just got this. Honestly, like that's how I see it. I don't have nothing by there. Let's just wait for some nice clear price action, please. Cool, right? Now someone's telling me this is going to go spunk to the downside, right? I can tell you, right? I know how the markets work, man. Oh gosh, these are some really bad examples. Okay, because it's really, I'm really struggling to show you guys examples where it's working, but it's just the conditions of the market right now are not great. That's simply it. Yeah, you can see how disgusting that is, man. It's not my fault. Gross. There we go. Market's looking clearer now. There we go. Beautiful. Although I doubt price is going to rise from here. Why? Because I got all these wick rejections by there. This is a really powerful setup, which I'll talk about at the end. But there we go. Sometimes I'm correct. Okay, there we go. Boom. What do we have by there? Everything lining up. Retest, and we've got our nice little push. We could have taken our trade down by here, but now let's see. Let's follow that pattern we spoke about earlier. Let's see if price wants to come back down. Okay. Okie dokie. Right. Trend has shifted. Okay. The trend has indeed shifted. So we can probably take our trades around by here. Okay, this is just looking at the 15-minute only. I'm not trying to look at no higher time frames and whatnot, just to kind of show you how this stuff works. Okie dokie, it's a massive stop loss. There we have it. We could have taken a 1 to 2, 1 to... Don't think we can get a 1 to 3 now because look at price has shown me a reversal signal. Is it going to go down still? Let's have a look and see. I'm not very confident, to be honest with you. Oh, there we go. Oh, it's messing about, pal. Messing about. There we are. This is why high time frames can obviously be important sometimes, and I'm just showing you for illustration of the video. Why is high time frame important? Because look, you see, this is actually a really important rule, guys. Okay, here's what I'm telling you. It's really, really important. Whenever you see a lower time frame break of structure, you've always got to check the higher time frames, bro, because that break of structure could just mean that price is just retracing to fulfill the entire structure by there. So if we're using that 50-minute example, you see how we're waiting for price to come down to the TDP or the retest. I can't remember what we were doing. It did the exact same thing on the 1 hour. Okay, and now it's more likely it's going to go and push up, and obviously we're not looking for one on the higher time frames. We're not looking for the whole trade. We're just looking for the entry by there. We're just looking for a little push. Okay, so let's keep it pushing. We got a few examples, didn't we? We got the retest level, which is like so. We saw that happen in real time. On the 1 hour on AU, we saw the high low, lower high formation. And then for here, we saw the TDP break happen. Okay, which you can also see this as a, you can see this as a key level reaction too. So it's all piecing together very, very nicely. Okay, the last thing that I'm going to speak about, okay, is a very, very powerful tool, which is what I use so much in my trading. You don't need any, like, you literally don't need, it's probably the easiest thing in the world to trade. And it is so awesome. I love it so, so much. But you just have to be quite diligent with your process, shall I say. Okay. So what I do is call this the 15-minute wick rejection trade. Because it's literally all you're doing is taking wick rejections, okay, right? And all you need, like so, is price to have pushed somewhere, okay. If you see something like, let me not get confused and just use this as an example. Okay, what you need is a wick rejection like so, and you need another wick rejection like so, okay, and you are going to go ahead, draw this box in like that, okay. And the criteria is, if you see price is pushing, let's say price is pushing up by here. Okay, if price is pushing up and you're seeing wick rejections, okay, you are clearly going to be assuming now that price is going to be dropping. So you need to have minimum two genuine wick rejections, okay? When I say genuine, okay, this by here is not a wick rejection. That is not a wick rejection. Just zoom out a little bit, you can see that it's just a wick. That is a wick rejection, okay? But like I said to you, okay, this whole thing is where price is pushing somewhere. It's not pushing and then rejecting by here. Let me show you. It's not pushing, okay, and then finding some wick rejections down by here. It's like this. Price is pushing, and then there's wick rejections like so, and then we're going to be taking trade to the downside. You could have a situation like this, but it has to really kind of like push, right? It can't just be like by there and there's wick rejections. Like you see how there's a wick rejection by there. That's not the case. Price is pushing upwards, so we want to see wick rejections. And all you need is minimum two of real wick rejections, but you need a candle which is going to go in the direction that you want it to go into. So if you're expecting price to go down, you need to see a bearish candle, okay? So all you do in this situation is literally go like this, boom, set a stop order like that. Oh, damn it, bloody hell. All right, set a stop order like so. I put my TP like this, my stop loss like that, not too big, not too small. And you're gonna go to the next key level. You just go to the left, right, and you just look for the next key level, which is right by there. And I wonder if price goes all the way down by there and hits TP. Great. Let's just go ahead and look at more examples. We saw an example by here. You might be in situations where you will be, you'll be stuck. You'll be thinking, oh, okay, I got the, oh, by the way, with that example, with the colored candle, it doesn't need to be a wick rejection. You just need it to be a candle. It can be a wick rejection, candle like so. But in this example, you can see that we've got two wick rejections, but they're from bullish candles, but we've got a bearish in between. You just need that one bearish, or that one desired candle. Does that make sense? Because we're expecting price to go down. okay? So you would, again, by here, set your trade like so. You wait for the 2 wick rejections, that's the most important part, and you have the desired candle. Once you do that, you wait for price to get into that zone, set your stop order immediately, and then you will pretty much want to go to the next key level. But if you're in a situation where you have a choice to make, am I going to take the retest level trade, or am I going to take the wick rejection trade? You always want to be following the structure. Okay, you always want to follow the structure, because you've got evidence that the price is going to push and you've got evidence that it's retracing, but just follow the structure always. Trust me, more often than not, it's going to follow the structure. Because in situations like so, right, where you see this, where you've got a wick rejection and then you've got the candle as well, okay, you can mark out this key level like this, okay, and then you can mark out the previous level, which is where you're going to be targeting your TP, right? And set your stop loss like so. Okay, price is already in this level, and what you do in a situation like this is that you may want to wait for price to give you evidence from the 15-minute that is going to muck about by there. And as you can see, it just broke through. It's not really giving you much, and I guess it kind of is by there, you know, and it goes up and does whatever. Again, this is all down to your own testing, you know, and that's pretty much it. Go and test that out for yourself. Go and find out how it can work for you. And I think I said we're going to do 5, so I'm going to cut it short and do 4, because otherwise we're going to be here all day. And okay, fine. Maybe let's just show you one more. Very, very simple. Very, very simple. Yeah, I can give you a nice... I say I'm going to give you a freebie, but I'm just giving you what I promised you at the start. So, yeah. Double tops and double bottoms. Okay? Honestly, just go ahead and look at them. Right? Boom. You can use it in trends, you can use it in reversals, you can use it damn near just by itself on the 15-minute, on the 1 hour, on the 5-minute, however it is. But the way you really want to trade this, especially the way I trade it, okay, is that I do it in conjunction with trends. So if I see, you know, if I see a trend, right, let's just go back. So if I see something like this is perfect, okay, where I can see that we have this potential higher low by there, right? All I want is price to get into this key level. I want it to give me some kind of a rejection, some kind of proof that it wants to push. I'm going to set my stop loss below the wicks, okay, right, like so. And I'm going to go ahead and expect price to push on higher, or I'm going to go and target this key level. It's pretty much exactly, you know, however you want to do it, okay? That's how I like to use it when I'm doing with trends. What I don't do, what I absolutely don't do, is see a trade like this where price is pushing upwards, okay, and then I take reversals from it, okay? They are pretty good reversal tools, right? You can see like, kind of, but yeah, the way you want to draw them, okay, you want to go from the wicks to the bodies, okay, and if you ever see any wicks that extend past the zone, you just want to extend it, okay, and put your stop loss below that zone. Sometimes you might do a situation like this where you see the double bottom or the double top. Okay, this is obviously a double bottom, right? The double top is when you're at the top by there. You see the reaction, you put your stop loss by there, price triggers you in, okay, but it leaves this little wick, right? Let's say you put your stop loss something like this, okay? Put your stop loss, don't do tiny like little thing like that, okay? You want to have it behind the wick, put it a decent amount, okay? If you think that's a decent amount, go and put a little bit more, right? Go and test it, see what works for you. You don't really need to go ahead and adjust that zone because you're already triggered in the trade now. If you want to go and do that, and then, you know, that works for you, then sure, go for it. But in my opinion, you don't really need to, okay? So go and check them out, double tops and double bottoms, draw them from the wicks to the bodies, use them in conjunction with trends on the 50-minute, 5-minute, 1 minute, 1 hour, whatever you want. They're really, really powerful. And all you need to do is wait for price to get into that key level that you've drawn and wait for a reaction. Wait for a wick rejection or wait for a little bump. And that's it. So guys, hope you enjoyed it. We're going to recap. We had key level reactions where you wait for a reaction from a higher time frame, or you can also use that from like lower time frames if you want to, but that's pretty tricky. So key level reaction. What else did we have? Do you know what? My brain has gone completely blank. I've completely forgotten it already. I think we had exhaustions, and then we had trend continuations, then we had the 50-minute wick rejections, which is great for reversals, and we've also got double tops and double bottoms. So guys, that's it. I'm out for now. Hope you have an amazing day, and I'll see you soon. Hope you guys have an amazing day of trading, and you make a lot of money, and I'll see you soon, guys. Take care.